Good morning, everyone, and welcome to Marketing Matters. I'm Sarah Touchstone, Landmark Titles social media marketing strategist and educator. I get the pleasure of bringing you guys Marketing Matters every single Wednesday morning at 10 a.m. We are now in the month of June, and June is heating up with buyers out there. Yes, we are transitioning into that buyer market. So, how can you position yourself to take advantage of this market? Well, this month of June, it's all about focusing on the non-traditional buyers. Yes, we all know about the first-time home buyers and, conventional loans and all of the traditional things. But this month, we're diving a little bit deeper into things like alternative loans. What are non-traditional buyers looking for? Foreign investors, and the likes of that. So please join us the entire month of June. We've got some great content starting out with today. I'm joined with Abden Stewart. He is with Nexa Mortgage, and he is going to talk all about Alternative Loans 101. He is an expert in this, and we are so glad to have him on today. Abden, the floor is yours. Take it away.
I'm going to be honest, I don't think I've had as excited of an intro as that ever. So
That
classes
is
are
like
usually a
that is my
little
gift.
little
Yeah.
calmer, but yeah, I'll try to match that energy. So definitely excited for the year. It's been a good one. There's still obviously interest rate concerns as we wait for the market to calm down, but there are definitely a lot of buyers in the market, and so much of that in regards to how we approach things is the attitude and the knowledge that we have to let people know that there are other options out there. So one of the things that my team and I focus on pretty heavily is the alternative financing. I'm going to share my screen with you. Hopefully everybody can see that. And we'll kind of peel through here and just go through these slides. If you have questions, please pop them in the chat. We'll try to keep that monitored, or if you're able to unmute and ask a question, that helps as well. So basically my information, Abdon Stewart with Nexa Mortgage, been in the lending industry for 22 years. We do a lot of loans. And like I said, our goal right now is kind of getting into the alternative space. We have about 270 lenders that we work with here at Nexa. So if there's a loan product out there, chances are that we have it, and we are finding new stuff all the time that is helping people get into products. So we're going to kind of chat a little bit today about the inside the box versus outside the box thinking. So we'll kind of pop in here and talk about what people do that is inside the box real quick. Conventional, FHA, VA, USDA, and Jumbo are your five main loan programs. If you are working with somebody that is not familiar with all of those, I would suggest expanding the network a little bit, because those are definitely the hot ones in the market. The non-QM or alternative lending space is actually growing by about 50% a year, though. So that means that a lot of this conventional FHA, VA business, which most people are very familiar with, is starting to push a little bit more into non-traditional space, because there's just so many restrictions within those programs, and people are finding that they need more options based on maybe how they file their taxes, or maybe other properties that they own, or they're trying to invest, and the traditional route just isn't working for them. So we'll kind of chat a little bit about what they're leaving off the table and what we can do to help you do more stuff. So in the market that we're in, guys and gals, it is very important to keep this temporary buy down loan in the back of your mind. It is very sensitive to where the interest rate market is on whether or not it is beneficial or not. Um, in a market where rates are 4%, not a whole lot of people are going to be doing temporary rate buy downs. In a market where they're 6.5 to 7%, there is a lot of value in doing it, especially on the buyer side. And there's a couple of reasons for it. And I'll just highlight the main stuff so that we don't spend too much time. This is actually a whole class by itself. But basically, when you do a permanent rate buy down, you're paying a percentage of your loan amount to remove or to reduce your interest rate a little bit. So on average, a 1% fee will get you about 3/8 to maybe a half, just depending on the day, lower in interest rate, which is great. And it's a great long-term savings. But most people going into 6.5 to 7.5% interest rates are not going to be keeping loans long term. So by the time they actually break even on the cost of what that 1% is versus the savings, they're already going to be looking at refinancing the home anyway. So doing a full permanent buy down isn't as valuable to them as having the seller pay for the temporary interest rate buy down. And if you can see on the screen here, if you cannot see on the screen, please let me know in the chat. But on the screen here, we're just using an example of an average loan amount of 400,000 at a 7.5% rate to show you the fully amortized payment would be $2,800 a month. But if you're able to negotiate a seller buy down versus a price reduction, you can apply that money towards the actual payment every month for 36 months. So if you're able to do it on a 3-year buy down, the payment for the first year to the buyer is $770 a month less than it would be on a fully amortized loan. They still have to qualify at that amortized rate, but their payment is $770 less because there's an escrow account set up for them with the funds that the seller has agreed to pay. The beauty of this and the reason that it's so much better than a permanent buy down is that if the buyer sells or refinances within that buy down period, all of the money that's in that escrow gets removed from their principal balance. So they're not losing anything. That money is always theirs. It'll always go towards their loan, whether it's monthly over the 2 or 3 year period, or whether they're doing a payoff or a sale or something like that. They will always get the credit for that. So there's no wasted money at all. And it gives them the time to get into something and really kind of feel it out and see if it's going to work for them long term. Also, while we're all hoping that the interest rates come down so that they can get into something a little bit better on a more permanent basis. So if there's any additional questions on that, we can definitely, do that offline. Bank statement lending, guys, is probably one of the most popular non-QM products. These are very, very helpful for people that are self-employed. I would say about 90% of the people that we get on this program make great money. They have no issue at all making payments on something, but their tax returns are showing quite a bit less in income than what their qualifying income needs to be for the property that they have. Probably one of the quickest examples that we have is we had a gentleman come in a few years ago, owned an off-road accessory business, was trying to buy $1 million home, had been turned down by 3 different lenders trying to do regular conventional financing for him. He was running about $800,000 a year through this business, and we were able to get him qualified on that bank statement loan for the entire purchase price that he was looking for with no issue at all. He didn't have to do anything fancy or funky. He literally just had to provide information about his business, how long he had been self-employed, and we did a 12-month average of all the deposits in his account. So he literally went from being someone who was not going to be able to buy at all to buying $1 million home just by utilizing the bank statement program. The reason that it'll list out multiple different varieties here is that there's different ways of structuring. You can do personal bank statements. You can do 24-month bank statements. They allow you to do P&L loans if you don't have, if you have multiple businesses and it's just too complicated to provide all of the bank statements for everybody. So there's a lot of ways to structure it. Some of it has to do with getting better pricing. Some of it has to do with getting better loan to values, things like that. So it really just depends on the client and what their needs are. So it is a really, really great product though, and we use it a ton. The other one that is becoming very, very popular, and I actually really love this product as well, is your asset depreciation and depletion loans. So Fannie and Freddie do have an asset depreciation calculation already in place. But for Fannie and Freddie loans, you have to be of retirement age, and they amortize their calculation over a 20-year period. When you're going into some of the non-QM lenders, they're actually allowing people that have retirement accounts at any age to go in, and they're doing 5 to 7 year calculations on the amortization. So I actually have a really good friend of mine that is moving back to Arizona from another state, thought that they were going to have to rent because their income had dropped a little bit while they were out of state, but they had quite a bit of money set aside in a retirement account, and they're now under contract on a home to purchase. Again, bringing them out of this we can't do it mindset and saying, hey, there is a way to structure this. Their interest rate is about 1/4% or so higher than what a Fannie and Freddie loan would be. And so it's just a really great option to look at people that are a little bit more asset heavy, that may not want to pull any money out. In regards to like our bottom tier here, where it says the irrevocable trust payments, there are a lot of people that will take money from an asset account or a retirement account. They'll put it into an irrevocable trust and they'll have that trust pay them out over a 3 year period their own money. And Fannie and Freddie allow you to use that for income. Anything that lasts for 36 months that can't be altered is going to be an income source. So let's say that somebody was $1,000 shy on their debt to income ratio. They just needed $1,000 more a month and they had $300,000 in a stock account. They could pull 36,000 out of that account, put it into an irrevocable trust, and have that trust pay them $1,000 a month. That is now income that they can use towards their qualifying ratios. So it is a really good product. The asset assist and depreciation products don't require you to move the money at all. They just want to see that you have it. They have their own internal calculations on your ability to repay, which is what everybody's obviously trying to meet, is the ability to repay rules. And so they're just becoming much more popular. The rates are pretty good. You do have to have good credit to use them. So it's not going to be something where somebody with a 580 comes in and says, "Hey, I've got $1 million. Can I go buy something?" They're probably going to be a cash buyer at that point. But for these products where people are just missing the regular conventional buckets, these are great options. And they don't have to have a ton of money. They could have 100,000. And again, if they only need a few $100s a month to get their ratios right, then that's something that we could use that they in the past have not been able to access. So really, really cool product. In our investor world, DSCR loans have taken over the entire investment market. We've done investment loans for years, obviously through Fannie and Freddie. Some people do private financing, etc. But DSCR came out several years ago. It stands for debt service coverage ratio. And the easiest way to remember that is, does the rent make the payment? That's really all they're looking for. And it's the ratio between that. So if the rent is $2,000 a month and the payment is $2,000 a month, they consider that a 1-to-1 ratio. Every lender out there loves that. Now, there are products that they want 1.25 to 1, but there are also products that will go 0.75 to 1 or zero ratio to whatever the payment is. And that's going to be based on the client's credit score, the amount of the down payment, their reserves, their history as a landlord investment owner. And so it's a really cool product. I actually have a couple of people that are going through it right now. They have pulled money from free and clear investment properties through a DSCR loan and are now buying multiple properties with those proceeds. So it's a really neat product and it requires no personal income. So there are a lot of people that have property that is paid off. Almost 40% of the homes in the United States are owned free and clear. And there's a lot of people that have the desire to go out and buy investment properties, especially in the multifamily realm right now. Duplexes to fourplexes to commercial properties have become very, very, super popular because everybody's trying to get that cash flow right. And so people that have these properties are able to actually now access those funds and use those funds without having to have their own personal income involved in it at all. So it's great for people that are either on fixed incomes, for people that are retired, or people that just don't want to go through the process of providing 2 inches of tax returns because they have multiple businesses and multiple investments, etc. So it's a much nicer product, very quick to close. And there are a ton of lenders rolling out more and more options on that every single day. So very cool product in the investment world. And we bring the reverse mortgage into this class because there are so many people that still don't understand that you can do a purchase with a reverse mortgage. So there are 10,000 people a day that turn 62 years old in the United States. And that's going to continue for several years. 62 and older gives people the ability to use it's a HUD-backed loan, but it gives them the option of buying a property, having a small mortgage on it, but not having a mortgage payment. So some people do it because they need it for cash flow. Maybe they're on a fixed income. Some people do it for investment strategy. They want their actual cash that they can invest in other things and not go into a mortgage. And it's an option that people can use the equity in their home without having to have it completely paid off. A paid off home is great, but you can't access that equity without doing some sort of a refinance or a home equity line or something like that. And so a reverse mortgage allows people to keep a lot of their money in their pocket so that they can do other things with it. The amount that they can get on a reverse mortgage is very dependent on where the interest rate market is. So right now we're not seeing huge loan to values on the reverse mortgages because the interest rates are a little bit higher. But as we see the market getting a little bit better and better, we will see those loan to values going up, so that people can finance a little bit more on there. Um, a reverse mortgage does require that you go through counseling. You have to actually do that before you get into the application process. It also requires that they pay their taxes and insurance on the property, just like anybody would, and they have to maintain the property. So it's not something that they just get to live there completely scot-free. There's obvious tax, insurance, HOA, maintenance that has to be done. Most of the people that we see that are doing reverse mortgages right now are doing it because they're moving from a lower cost area to a high cost area. And so maybe they're 50 grand short of being able to pay cash for something or 100 grand short of being able to pay cash for something, but they really don't want to have a mortgage payment because they want to keep their expenses fixed. So it is a very popular product for people that are kind of moving from one area to the other. I would say number two is people that are just feeling the crunch of how expensive everything has gotten and they're just trying to eliminate a payment. So, maybe they have a payment that's 800 or 1200 a month and they're like, I'm making it, but I have no savings and I can't do anything extra. So a lot of people, I would say definitely the number two reason is that they are going into that and saying, hey, we need to alleviate this $800 a month payment that we can have in our pocket. So, really, really great product and definitely super, super helpful. So, and then finally on the last here, and then hopefully we'll have some questions about some stuff that we can kind of go back and forth on is all of the other product out there. I could spend 6 hours talking about different loans and products and things like that, which obviously we don't want to do on a class like this, but fix and flip financing is huge. All the way through, since rates started popping up early in 2023, the fix and flip financing really has not slowed down. We've actually seen lenders run out of money on the fix and flip side, because so many people are buying property and renovating, and most of them are renovating to sell, but we have seen a lot of people that are buying properties, renovating it, and then they're refinancing them to hold as rentals. Um, we are also seeing a lot of people that are buying properties that are allowing for lot splits and things like that. So they'll buy a 2 acre fixer upper, they'll fix and flip and split the lot, and then they'll have an acre that's free and clear that they can do another project on. So all of that type of financing is becoming really, really popular. You do not have to be an experienced investor to get into it. They are going to have a little bit more restrictive guidelines for you if you've never done it before. But there is not a requirement that you've done 4 or 5 or anything like that. There's a lot of places that are allowing for first-time investors to go in and kind of get their feet wet with that. There are also some companies out there that will help people walk through that first one. So they'll do kind of an equity share deal and help people walk through, is it a good deal? How do you schedule all of your contractors, etc. So there's places like that that are out there as well. On the construction side, especially right now, because inventory is starting to build, we're not seeing as much. We saw a real peak in it here for a while when inventory was getting hard. People were buying property and they were wanting to build. Now that there's a few more homes coming on the market, we're seeing people kind of opt to go into resale, but construction is still really popular. There's a lot of people that don't want to go into an older home. They don't want the maintenance, but they also don't want to go into a track home that maybe a builder is putting together in a development, so they kind of want to do their own thing. So construction is definitely something that we see a little bit more of than we used to. Bridge loans and cross collateral. This is a very, very, very popular product right now for people that are moving that don't want to have to sell before they buy. So we do a ton of bridge loans, we do a ton of cross collateral loans. And the basics of it is if they own a home and they have a lot of equity or they own it free and clear, they don't want to have to put their home on the market, do a simultaneous close. Everybody moves out within 24 hours, and rush, rush, rush. Most people that own homes that are free and clear or that have a ton of equity in them want to move at their own pace. We tend to find that they have much better credit and are a little bit more particular about things. So they love having the option of being able to buy a property, collateralize the two together, or just use a bridge loan. Typically, you're going to have some sort of cross collateralization in there, but then it gives them up to a year to sell the other home. So there's a lot of buy before you sell programs out there and things like that where you can get investors to make offers on a property, but most of them are giving you about 90 days to sell. And if you aren't selling, then they execute their offer. Their offers are usually around 75% of the value of the home. So it's a little bit risky in a market where houses are sitting. The bridge loans are obviously a little more expensive than a regular Fannie Freddie deal, but they're much, much more realistic in the cost when you look at the flexibility that it gives you. And I would say so far, I can't think of anybody who's had a home that's really sat for a long period of time. Usually we see people have sold their other home within 2 to 3 months. They're just looking for these products to get them over the hurdle of, I want to make sure that I find the right house. And if you do any type of listings at all, or you've got a buyer that owns a home, I'm sure that you've heard the excuse, well, I don't want to put my home on the market without having something to buy. That's exactly where the bridge loan comes in. That gives them the option to do it right away. And then we do all types of alternative loans in regards to portfolio stuff. So we have lenders that do loans against Bitcoin. We have lenders that do wraps on multiple properties. So I have a client right now that we're doing a wrap loan with that has 16 investment properties. So he's doing loans that engulf multiple properties at once instead of having 16 individual loans. Um, it's pretty popular once someone gets usually above like five or six. The first few individual loans, not that big of a deal, but when you get guys that get a real portfolio going and they've got 20, 30, 40 properties, it becomes a little bit of a headache for them to manage all the different servicers and which loan got transferred to who. So the blanket loan or wraps have become much more popular in that demographic. So it's a really cool product. There's a lot of stuff out there. At Nexa, we do everything from land to commercial. So if there's a product out there or there's a way to structure something, it's one of the main ways that we're getting our business right now is just people are getting turned down or maybe they're not getting qualified for enough. If you go back to the asset assist loans, I have a client that's moving from Arizona to Colorado. They really needed to be at least in the 8 to 900 range. And on all of their conventional pre-approvals, they were getting stuck around 450 to 500. We actually use the asset assist because one of those borrowers has about a half a million in retirement, and we were able to push them up into that $900,000 price range that they were looking for. So again, it's allowing somebody to do something that they were not going to be able to do at all. So if there's any questions on this stuff, guys, please let me know. That's the actual end of the slide. I know they wanted me to kind of keep this in the 20 to 30 minute range. So for now, I would say that we'll open up to any Q&A that you have, or if there's any specific scenario stuff that you want to run over, and I'm happy to stick around as long as you want.
Yeah, guys, let us know in the chat if there are any questions that you all have. A lot of times I do notice on our Marketing Matters webinar, people get on, they listen, they process, and then they reach out after too. So,
Which is fine.
Yep, Abden put all of his contact information in the chat window as well. If you are watching the recording of this, please just reach out to your business development manager and we can get you his contact information. So if you guys have any questions, let us know. I'm going to go ahead and wrap up our webinar with upcoming classes that we have, which one of them does feature Abden as well. So we're going to go through that, all of the goodies that we have. Just like Marketing Matters, we have so many great classes, great speakers, wealth of knowledge that we offer here at Landmark Title. You guys know that you can always go to our events page on our website at ltaag.com/events and find all the classes, all the events that we have coming up. I do try to update that at least once, if not twice a week. So go always check that out. If you have questions, then of course you can always reach out to your business development manager and be like, hey, what's going on this month? I want to take some classes. Speaking of what's going on this month here on Marketing Matters, we have an amazing schedule for you. Next week, we're going to cover the 1031 exchange. The following week, we're going to cover FERPTA, and then we're going to wrap it all up at the end. All of this knowledge that you've accumulated over the month with how to market specifically to investors. So make sure you guys are joining live at 10 a.m. on Wednesdays, or you are asking your business development managers for a copy of the recording. So later today, speaking of great classes, later today, I'm going to be over at the Atrium at Arrowhead talking about Canva. Canva is one of my favorite tools to use for everything, not just in our real estate industry, but I even use it for personal things. I love some of their video features. I feel like these are underutilized. Did you guys know that you can get perfectly crafted Reels videos for real estate right within Canva? I know everybody knows they need to be doing video, but they do not love being on video. Well, there are tools out there that are going to make your life and your marketing strategies so much easier. So if you have time, 1 p.m. to 3 today at the Atrium at Arrowhead, come over and join me. And then we've got next week, same place, not the same time, 9:30 to 11:30. We're going to be doing Maximize Your Open House with all the buyers out there. Doing open houses is such a great way to create those buyer leads. So we're going to be talking all about how to maximize every time you are doing an open house. This is next Tuesday, June 10th at 9:30 at the Atrium at Arrowhead. I'll be teaching that one as well. And then the following day, we have a CE class on contract law, present the offer no matter what. This is also at the Atrium at Arrowhead. Obviously, we're doing a lot of stuff over at Arrowhead, guys. So this is 9 until noon. This is next Wednesday. Make sure that you are pre-registering for this because space is limited. So if you need to, reach out to Renee to get registered for that. And then the following day, June 12th, we are hosting the Cromford Report. We are hosting Tina Tambor live on Zoom. I love getting market reports. I think it makes me just so much more knowledgeable and well-rounded when it comes to helping realtors in our market. So if it works for me, I know it's going to work for you. Make sure you scan that QR code, you get registered for that. You do have to do a pre-registration, so don't wait until the day of. This is 1 until 2:30. So join us on that as well. It's going to be great. And then June 18th, we have Managing the Home Inspection, 3 hours of disclosure. This is going to be over in Surprise at Total Wine. Usually we do a little wine tasting after the class, not before the class, right? You got to get all that CE knowledge. But after, then we celebrate for getting CE knowledge and learning more about the home inspection. June 18th, 11 a.m. until 2 p.m. Scan that QR code to sign up or reach out to Renee to get signed up for that one as well. And then moving ahead to July, we're going to be talking about Canva later today, but coming up in July, we're going to be talking about Canva's latest tools. Every year, Canva does a new software drop, essentially, of the new things that they're integrating and some of the new things that they introduced in April. They're coming out very slowly with them, but I'm hoping by July they'll all be live, and we're going to talk about how you can really use these new tools in Canva to streamline and implement in your real estate marketing. So that is July 8th at 9:30 at the Atrium at Arrowhead. And then this guy, yes, Abden is coming back to join us on July 9th. He's going to be talking about the alternative loans, but this is going to be a lot more in depth. We kept it kind of short today. So please come join us. This will be on Zoom as well, 11 until noon. So we're going to give him the full hour to dive into this great topic. Scan that QR code. You can reach out to Patty to get registered for that. You got a little bit of time on that one, but hey, June's going to fly right by. So make sure you get registered for all of those great classes. And of course, every month we have our amazing Moon Valley home tour and our Biltmore luxury. Obviously, I did not update my Built More luxury flyer yet, but it is the fourth Wednesday of the month. So that will be June 25th. And then Moon Valley is the third Thursdays. So always great home tours that we do on a regular basis. I think Moon Valley has been going on for like 20 something years. So these are great to attend, or if you have a home in the area that you would like on that home tour, reach out to your amazing business development managers. We've got Beth, Hannah, Keith, Michael, Patty, Renee, and Raylan up in Prescott. They are here for all of your marketing needs, even through the hot, steamy summer that we are now experiencing here in Phoenix. So please reach out to them. They'll be around all summer to help you get a great marketing plan and strategy. And of course, thank you to Landmark Title for allowing us to bring you great content here, like alternative loans and so forth here on Marketing Matters. We have 7 offices here in the Valley to service you, 1 up in Prescott and 1 up in Nevada in the Las Vegas area. And of course, thank you to our great guest speaker, Abden. These are great loan programs that are out there. And it really, with it, especially with it becoming a buyer's market, I'm so glad that we are getting out there. We are getting educated about the different programs, because that just means that we are that much more empowered to help our clients. So thank you very much for being on today.
Of course.
And I'll look forward to seeing you again on July 9th. I think I'm hosting that webinar as well, and learning even more about all of these great programs.
Perfect.
That's it for us today, guys.
Thanks, guys.
Thank you.